What's up, everybody? Hope you're doing great. Wanted to spend a few minutes today talking about bi-weekly mortgage payments and how it can help you save thousands of dollars, if not tens of thousands of dollars, and help you pay off your mortgage years earlier. So let's get started. The bi-weekly mortgage payment is pretty much what it sounds like. Instead of the traditional model of paying your mortgage every single month, we end up breaking it down into payments on a bi-weekly basis. So what does that mean? Well, every year, as we all know, has 12 months and 52 weeks. When you pay half of your payments every 2 weeks, so if your mortgage is $2,400 per month and you pay $1,200 every 2 weeks, you actually get 13 full payments. So an additional month every single year that you're paying that. That's the equivalent of an additional $10,000 or more in savings because you are paying off that mortgage earlier and thus saving significant money on the interest rates. And when interest rates get higher, like they are right now, the savings can be even bigger. So when you take a look at these graphs, you can actually see the impact that an average mortgage would have. In the graph on the left, you've got the green and the blue. So the blue represents the regular monthly payments. Every single year, it's going down and down and down until you get to 30 years, the most common mortgage that most of us have. But by doing a bi-weekly payment plan, you can see in that green arrow or in that green bar how much quicker you can actually pay this off. And on the right-hand side, we have an example for a $200,000 loan at a 4% interest rate. Monthly principal and interest of about $1,000. The equivalent biweekly payment is $440. And if you use that situation, you would repay the loan in 310 months instead of 360 months, aka 30 years, and save $22,000 in interest. And you can even accelerate it a bit more if you want to. So with that, let me show you a couple ways that you can execute this biweekly mortgage payment process inside of Sequence. So what I have right here is a pretty straightforward and simple Sequence map. We've got our user, James, making $10,000 a month. And in James' situation, he has an emergency savings account. He has a Roth IRA. He did already set up a fixed expense account, a great principle to do because we can start to separate our fixed spending from our fund money. And that's one of his other accounts, the fund money. And lastly, he has a brokerage account. Now, again, I like to set this up as a bit of a waterfall so you can start to see the rules. In this case, we have $1,000. We have $583, which over the course of the year, since James is paid monthly, gets us to the $7,000 max for IRAs in 2024. His fixed expenses cover the $4,300. And then the remaining money is split 50-50 between fund money and his brokerage account. Now, there's a couple different ways that we can execute this bi-weekly strategy. The easiest way would actually be for us to either add an account or I'm just going to add a pod. We'll call this mortgage acceleration account. And what would we do? Well, we'd add a rule and we're going to stick with the sample of a $2,400 a month mortgage just because it's easy to divide. Is every first of the month, I am going to set this rule up. So trigger schedule, date type, and let's say monthly on the first of the month. We're going to transfer a fixed amount. Now we said the mortgage was $2,400 and I want this to happen every single month. So 2,400 divided by 12 gives me $200. So fixed amount of $200. And now I've set up my sequence so that not only is all of my normal spending happening, but every single month, an additional $200 is going to my biweekly or mortgage acceleration account so that at the end of the year, I can send that additional 13th payment to the bank, helping me pay off the loan early, saving up to 7 years and tens of thousands of dollars on your mortgage interest. So I hope this was helpful. If you have any questions, let us know in the comments. But in the meantime, happy savings and have a great day.